Hello, good morning. You're watching The Mining Show, brought to you by Blytheweigh on Core Finance. I'm Charlie Gibson. Now, for those of you who are fans or familiar with the Avengers movies, you'll know that Thor's hammer is a mighty thing. And another mighty thing for mining companies is when they finally complete a feasibility study. And one company that puts those two things very nicely together is Thor Mining. And joining me now, all the way from Adelaide, Australia, is Mick, the chief executive of the company. Mick, very good, I would say good morning to you, but I presume it's good evening to you over there. Thank you very much indeed for joining us.
G'day, Charlie. Yes, it's the back half of the afternoon, and thanks very much for talking to me. I hope your weather's as nice as ours is shaping up to be.
Actually, I suspect it might be as nice. I'm not sure if it's quite as hot. We've got a nice clear blue sky here, but there's a slight chill in the air. I think the heat of the summer has gone, which is probably not your experience in Adelaide, I wouldn't have thought.
No, well, we're just starting to warm up after a very bitter winter. I'll be over there in about 3 weeks' time, and I hope you keep the sun up for a little bit longer.
No, well, we might keep the sun. We'll see what we can do. I'll have a word where it matters. In the meanwhile, Mick, tell us about this feasibility study that you've completed.
Yeah, sure, Charlie, and thanks for the opportunity. We've done a lot of work in the last few months on converting the new ore reserve that we published back in January into this feasibility study. I guess the core things for people to take home are we now have a mine life of 7 years. We have a capex requirement of about just over $40 million to finance this beast. And I think most importantly, we have an operating cost for Molly Hill once we've paid to set it up and commission the plant, etc., of about $90 US a metric ton unit of tungsten. Now that's less than a third of the current tungsten price. So there's lots of margin for things to go wrong and for us to still to make a profit. There's lots of others if the bad times come along. Again, as they do in every industry, lots of others are likely to drop out of the business before we will. So I think we're well placed. And perhaps the final thing that really gets me excited is that the project payback of all the capital to get this started, commission, etc. That payback period is less than 18 months. We've got very high grades and very low costs and quite high revenue for the first couple of years. And I think that de-risks the project quite nicely.
It's certainly true to say that a lot of this is captured in one figure, isn't it? Which is the internal rate of return, the IRR of the project, which looked pretty funky. As I read it, it was somewhere north of 50%.
It is. It's closer to 60 than 50, and that's a very attractive number, I guess. And again, I guess that's driven by the high revenues and very high profits in the first couple of years. I guess we have at Molly Hill a very high grade open cut tungsten deposit with some quite nice credits for the molybdenum as well. That drives the IRR. It drives our low costs. And I guess it drives the net present value and the value for the shareholders. So we're fortunate we've got a high quality resource, and hopefully we've put in sufficient work in the feasibility study to attract the financiers over the next few months.
Now, with that in mind, I think I'm right in saying the net present value, and I think you're using a discount rate of 5%, but the net present value is somewhere north of 100 million Aussie dollars. Is that right?
It is indeed. Some people have commented about the 5% and said, well, perhaps you should use 8% or whatever. At 8%, it's almost $90 million. So it's still a very attractive proposition on the discounted cash flow basis, whatever the rate is, unless you pick a discount rate of 59%, in which case the discounted cash flow will be zero, because that's how the maths work.
What I suppose then, the odd thing to observe is you have this project with a very high IRR. What's your market cap at the moment?
Our market cap, Charlie, is around £13 million.
£13 million. So can we round that to, what's that, about 20 million Aussie dollars, roughly?
Oh, seasonally adjusted, maybe 22, but yeah.
Right, so I mean, the odd thing is you're trading at about 22%, let's say, somewhere in that range of the NPV of the project. So are you a bit disappointed with your share price reaction?
Charlie, I'm not happy at all about the share price, but as we've agreed in the past, no matter how right I am, the market's never wrong. I just think that from time to time, the market takes a while to come to the same conclusion that I've come to. And even if you put Molly Hill to one side, we've got a couple of cracking projects elsewhere in the portfolio with our Pilot Mountain project in Nevada, where we'll have a scoping study out in the next week or so. And that's a very large tungsten deposit, also relatively high grade in a safe jurisdiction. And our Kapunda copper project, which is doing some pretty exciting things here, right here in South Australia. So, Molly Hills probably is our most advanced asset, and perhaps most of the value should be attributed to our most advanced asset. But Pilot Mountain and Kapunda don't come without value.
That's on the subject of Molly Hill, your most advanced project. I suppose one thing, do you think that might be detracting investors, is it the fact you said your mine life is about 7 years? Do you think they're perhaps looking for 10 years? Do you think you could do more exploration to extend the 7 to 10? Or basically you're saying, look, that's it, it's a 7 year, but it's a very high IRR, it's got a good NPV, and it's worth investing in its own right, even if it doesn't tick that 10-year box on the face of it, or certainly initially?
Charlie, we have an ore reserve that says at this mining rate we have a life of 7 years. We're not going to reduce the mining rate to extend the life. That would be foolish. But what we do have at depth below the open pit shell in the resource are sufficient blocks of ore that have been identified by the guy who did our ore reserve back in January that tick the boxes for to be economic for underground mining under most bulk underground mining techniques. We haven't done the work for that, as for the geotech work and the mine planning work associated with that, but there's almost certainly at least another year of underground mining at Molly Hill, and I suspect there'll be another half a dozen years or more of underground mining at Molly Hill.
So open at depth, is it open along strike as well?
It's open at depth, not necessarily along strike. There's sufficient. What we do have is a couple of semi-vertical deposits, so they go deeper. In fact, I suspect they go more than 1 kilometre down, according to the geophysical image. But along strike, there's perhaps limited opportunity. The other thing we do have is 30 kilometres away at Bonya, where we've just announced this year that we've done a deal to get an interest in this Bonya tenement. There are about a dozen outcropping tungsten deposits that haven't had a drill hole put in them since the 1970s. We're just tidying up and finishing off the deal to acquire a 40% interest in Bonya. We will have management of that project. And we will be, once we've done the clearance for the traditional owners on the sites we want to drill, etc., we'll be drilling on there sometime soon. And I suspect by about year 3 or thereabouts of production at Molly Hill, we'll be seeing some more coming from Bonya, trucked from only about 30 kilometres away. And that's a very economic trucking distance in this business.
So what about the development of Molly Hill? You said initial capex 40 million Aussie dollars. So yeah, go on.
A bit over 40 million US.
A bit over 40 million US. Okay. So that's about 53, 54 Aussie thereabouts.
I'm sorry.
About 53, 54 Aussie dollars million.
Of that order, there's another 11 million Aussie dollars worth of mining equipment, power generation equipment, and the like that sit on top of that that 50 odd million to take it up to to a little under 70, and we're quite confident, very confident, that we can finance that under what I would call asset financing, where someone can come along and take possession of the goods if the bad times come along. So that's outside, in my view, that's outside of the project finance requirement of 43 million US.
Okay, so you're not looking to raise any equity in order to develop the project, or might you be looking to raise a little bit of equity?
Charlie, our first plan is to get money from at the project level, if we can. There are off-takers, people who take tungsten concentrates and molybdenum concentrates who want the product. They are products in demand right now, and these are people who have in the past financed or partially financed tungsten developments. There's no reason why they shouldn't be approached, and they certainly have been approached about doing the same for us. There are others we are talking to who have run the idea of a joint venture arrangement through. I can't say who they are, and I'm certainly not going to pretend that a deal is going to be announced next week or next month or anything of that nature. These things do take time. But our preferred means of financing is not to go to shareholders or go to investors and say, let's do another heavily discounted placing. There are no heavily discounted or placings for Thor Mining in the near future.
And I suppose the important thing there is you have options, or you're giving yourself options.
I believe we do, and I think to some extent the people who finance the mechanism of the finance deal will be dictated by the wishes of those who have those funds and who advance them. But I'm hopeful that we can do a deal that meets our shareholders' requirements of not diluting the hell out of them to make this happen.
All right, Mick, we wish you the very best of luck. Thank you very much indeed for joining us. We look forward to seeing how those talks and that financing goes. And yeah, we look forward to hearing how the project progresses in the next few, well, I suppose it'll be months. I'm afraid that's all we got time for. That was Mick Billing, the Chief Executive of Thor Mining, joining me, Charlie Gibson, on The Mining Show, brought to you by Blytheweigh on Core Finance. And I was talking about the share price there, and for all the fact that Mick is disappointed by the absolute level of his share price, you can still say that these shares are trading just under tuppence, and a year ago you could have bought them for 0.7 pence. So as the Americans say, you do the math, but that's roughly, you could have had an uplift of about 3 times over the course of the last 12 months. As I say, that's all from me, Charlie Gibson. We look forward to seeing you next week, when hopefully we'll be looking at more companies with more such upside possibilities. And until then, wish you a very capital day.